if it's taking weeks to get your books finalized, it's not just an accounting problem, right? It's your business trying to tell you something. Everyone, I am Amer Maqboul, CPA, the place where clinic owners learn how to make smarter business decisions, boost profit, and cut waste every single week. We're diving into a topic that not even every business owner even realizes is a problem, right? And that's delayed month-end close. So if it's taking weeks to get your books finalized, it's not just an accounting problem, right? It's your business trying to tell you something. And today I'm going to break down what that is and how do you fix it. So to start off, let's set the stage. What is a month-end close, right? It's the process of pulling together all of your revenues, your expenses, your payroll, your cash flows, bring these all together to make sure everything ties out and we've got reconciliations to support a true picture of our financial reality in our business, right? So in your ABA clinic, having this close done provides you with clarity needed to make cash flow decisions, right? Gives you the clarity and confidence on what your profit is, your KPIs, like utilization, cancellations, and labor costs. So without this information, you're really flying blind, and that's when the small issues start to snowball into big problems. So what are the signs of a delayed close? You'll be able to spot this pretty easily, right? You'll know your close is dragging when your financials are always coming out late or they're constantly being revised. You feel like the numbers are changing week over week. You can't trust the data enough to make confident, informed decisions, right? Cash feels tighter than it should be, and you can't pinpoint why it feels that way, right? So if that sounds familiar, it's not just a bookkeeping delay, but it's a signal that something deeper is going on. It might be operationally or structurally from a process perspective. So let's unpack what it really means when we have delayed month-end closes. The first thing is it could be unreliable or inconsistent data reporting, right? This is one of the biggest pain points that we see in the ABA industry because a lot of times what we have in the accounting system versus the practice management system don't agree, right? They don't show the same information or the same numbers, right? We might open up QuickBooks and see an accounts receivable number in there that does not align with the accounts receivable that we see in our practice management, all right? It could be totally different. And that's normal because those two systems are measuring two different things. Your practice management, your billing system, is looking at your accounts receivable at the billed amounts, right? So sometimes we're billing at inflated rates to account for adjustments or any other things, changes in pay rates, whatever the case may be. We're billing at these inflated rates. So when I pull a billing report from my practice management system, it shows that I billed $250,000. But if I go into QuickBooks, from the accounting perspective, I only want to know what I can collect of that $250,000, right? So if my inflated billing is $50,000, right? We go from $200,000 is what I really expect to collect based off what I billed and standard rate adjustments or contract rate adjustments. I expect to collect $200,000, but my billing software says $250,000, right? And that's from differences in the definition from the billing perspective versus the accounting perspective. So I would never expect these numbers to necessarily match, right? Most practice management systems show the billed amount and not the expected amount. But they should still reconcile conceptually, right? The issue here isn't the systems, it's the bridge that is connecting those two systems. So our goal isn't to make those balances identical, it's to make sure that the relationship between those two systems makes sense, right? That what we are billing, collecting, what we're recognizing as revenue in accounting, all of these tell a consistent story. So what we want to focus on is creating a consistent, repeatable reconciliation process between your billing systems and your accounting system to ensure that they match each month, right? Again, emphasis that the numbers should not match perfectly, but there should be a clear way to explain how we connect the two, right? And we should be able to put that into a reconciliation and save that with our work papers. So next thing, it's not always just about our systems, right? The delay could be about our process. Maybe our bookkeeper is waiting on payroll journals, or they're waiting on bank statements, receipts, right? Nobody's tracking who's responsible for getting these things to the particular individuals and what their particular deadlines are. So that's not a people problem or a system in the sense of tools problem, right? That's a clarity problem. People don't understand what their responsibility is and what they need to put out. So we need to build a month-end checklist that clearly defines each task in month-end close, who owns that task, when it's due, right? Is there any prerequisites to that task? This can't be done until the billing report is ready from the billing team. We want to have all these things in the checklist. And this is true even for outsourced teams, right? If you don't have an internal bookkeeping and accounting function, maybe you're using a firm, you still need to have this level of structure and this level of understanding who owns what part of the month-end close to ensure that it's getting done in a reasonable time frame. We're cutting down on the back and forth, right? We're holding everybody accountable to what they are responsible for. Next item. So if your close process is stretching into the third week of the next month, it's a big red flag, right? It usually means we've got too much manual cleanup at the end of the month, or maybe we haven't done enough throughout the month to get us ready for month-end close. Maybe we have some unclear cutoffs, or we're not properly utilizing automation. So if you have an internal in-house accounting and bookkeeping team, I'd expect your close should be done within 7 to 10 days. And then for outsourced or fractional teams, right? It's a little bit longer of a window because, again, this is a fractional service, but it's 10 to 15 calendar days. The piece that I want to emphasize is that it's calendar days and not working days, right? If it's working days, 15 days gets us into the third week and we're not closing quickly enough. Again, we do not want to roll into that third week of the month without having clear closed financials that can be distributed to the management team or the folks that are involved in decision making. So we need to be using automation wherever possible, right? So most of us are using QuickBooks or Xero, one of these systems, and we have these automated bank feeds in QuickBooks. That's fantastic. If we don't have these automated and scheduled bank feeds, we need to get that set up. It saves an abundance of time, right? Just having those automatically imported. We can also have recurring journal entry templates set up within our system to capture those monotonous same journal entries that we're booking every month for our month-end close. We can make sure that we are integrated with our payroll system, right? A lot of these systems can integrate. You can map where the different payments are going so that everything is getting accounted for. The best month-end close processes are confirmation processes. They're not cleanup. This is what's in the book. I've confirmed it against my supporting documentation and data. Good to go. Let's move forward, right? And finally, even if you are closing on time, if you're not reviewing those numbers, you're missing the real value and the real purpose of a month-end close. When financials are just filed away without any analysis, you lose the opportunity to catch trends like payroll creep, rising cancellations, collection slowdowns, right, before they hit your cash flow. Because chances are, if you're not reviewing these financials, you're finding out that these are a problem when you have those cash flow struggles, okay? So build in a time block every single month, right? A recurring 30-minute meeting, hour-long meeting for just a short financial review. Let's go through the numbers, make sure we understand what they're telling us. Did we go down in revenue from prior month? And if so, what was driving that, right? Use the data to your advantage. So we've talked about what the hiccups are in a month-end close. Now, what makes a month-end close process healthy, okay? Because it's not about perfection. It's about predictability and actionability. So timing-wise, we want to have this wrapped up in 10 to 15 days. Whether we're internal bookkeeping team, external bookkeeping team, 10 to 15 days, we should have a month-end close done. We're concerned with quality too, right? All of our accounts are reconciled, our bank accounts, our credit card accounts, our loans, our revenue, billing, payroll. we should be able to tie all of these numbers back to supporting documentation that says this is accurate, right? And we need to store that documentation consistently. We need to have a system, a folder structure where we know how to easily get to those different points to see those reconciliation. And what's the outcome? By mid-month, our leadership teams have accurate, clear financials that they can use to drive decision making for the next month, look at where we're going in the future and how we want to adjust any strategies, capital allocations, anything like that, right? We're not just looking backwards to see what went wrong. We want to know what can we change to move forward. So, step number 1, you start creating your month-end checklist. Assign your owners, your deadlines, your prerequisites. Any responsibility related to your month-end close needs to be in that checklist, and it needs to be documented who owns it and when it's due. Set a standard timeline for close. Again, I probably sound like a broken record, but 10 to 15 days. If we're beyond 15 days, we need to start looking at the processes, the systems, and figure out where we have leakage in this process. Ensure all of your systems are aligned, right? Your billing, your payroll, your accounting, they should all be speaking to each other. And if they're not able to speak and integrate with one another, then we should have clear ways where we're reconciling them and documenting these things. Schedule financial reviews every single month. 30 minutes to an hour, go through the financials and understand the story it tells, and use tools that reinforce accountability, right? If you've got workflow management tools, a shared close tracker, somehow, some way, this should be in a tool, whether it's an Excel spreadsheet or something like a Monday.com or Asana for workflow management. If your month-end close keeps getting delayed, don't just blame your bookkeeper or your systems. Take it as a signal. Your business is trying to talk to you. It's trying to tell you something. It's trying to tell you there's a process here that is not working the way that it should be. And it's time to jump in, make adjustments, assign ownership to these processes. So if this resonated with you, I would love to chat. I'll leave my link, my scheduling link in the comments below. Book a 15-minute digital coffee with me and we'll start breaking down your month-end close process.